In June 2024, Jennifer Petrillo opens the bookkeeping software at Hollywood Casino Penn National, types a name that does not exist, and prints a check. She is a part-time bookkeeper in the horse racing division. Her salary is modest. The casino behind her tracks every chip, every card, every face at the gaming tables in real time. The check she just printed is made out to a company that has never existed. She signs it. She approves it herself. She mails it. 2 weeks later, the money arrives in an account she controls. Over the next 9 months, she will do this again and again. 4 ghost companies, dozens of fake checks, $727,000. Not one automated system flags it. Not one supervisor asks a question. Not one camera sees anything. How does a part-time bookkeeper steal $750,000 from one of the most heavily surveilled businesses on earth, using nothing but a checkbook she was authorized to use? One woman, one office, one gap in the system. Start with the office. Hollywood Casino at Penn National Racecourse, Grantville, Pennsylvania. Population of the town, roughly 600 people. The casino is bigger than the town itself. The gaming floor runs on surveillance, cameras on every corner, algorithms tracking every transaction in real time. It is one of the most financially monitored environments on the planet. But the casino has a quiet corner, one that works differently: the horse racing division. Horse racing is old world money. Trainers, jockeys, horse owners, all paid through one office. Prize funds called purses flow through every week. Maintenance fees, veterinary costs, track services, hundreds of thousands of dollars moving in and out constantly. Most of it moves the old-fashioned way: paper checks. Here is the critical detail. The casino does not own these funds directly. It administers them, manages them on behalf of the racing industry, which means they sit in a separate accounting layer, one the main casino audit does not scrutinize the same way it scrutinizes the gaming floor. 3 employees had access to the bookkeeping system. 3 employees could issue physical checks. Jennifer Petrillo was one of them. She started the job in June 2024. Within weeks, she understood something the people above her did not. The prize fund accounts moved constantly. New vendor names were added regularly. Checks went out to horse owners, trainers, service providers, people the main accounting department had never personally met. Nobody cross-checked the recipient list against real registered businesses. Nobody required a second signature on outgoing checks. And when the system flagged a warning, an unusual balance, an irregular transaction, one person had the authority to override it manually. That person was her. The fraud prevention industry has a term for what failed here: segregation of duties. The principle that no single employee should be able to initiate, approve, and record a transaction alone. She could do all 3. She was not a criminal mastermind. She was a bookkeeper who understood one simple thing: nobody was watching this part of the system. June 2024. She opens the software. She creates a name that does not exist, and she writes the first check. It is small, deliberately small, not greedy yet, testing. The first check was written in June 2024. The amount has not been publicly disclosed, but investigators who later reconstructed the scheme described it as deliberately modest. This is how financial fraud almost always begins, not with a large number, with a small one that nobody questions. She filled out the recipient field with a name that did not exist, a person or a business convincingly formatted, the kind of entry that looks completely routine when you are processing dozens of vendor payments every week. The check was printed, signed, sent. Then she waited. No phone call, no email from accounting, no visit from management, nothing. The money arrived in an account connected to her. The casino's system showed a routine outgoing payment. And somewhere in rural Pennsylvania, a bookkeeper sat at her desk and realized something that would change the next 9 months of her life. It worked. The first purchase was a luxury spa treatment, not a Tesla, not surgery, a spa. For years, she had processed other people's money, calculated other people's prize funds, signed checks that went to horse owners and trainers and vendors. Now, for the first time, she spent something on herself. 1 week later, she opened the software again. This time, the amount was larger, because fear had been replaced by something more dangerous: confidence. By July 2024, the checks were going out regularly. Different amounts, different recipient names, spaced apart carefully. She varied the timing, varied the amounts, always staying just below the threshold that might trigger a manual review. But one fake account was becoming a risk. One name appearing repeatedly on outgoing checks. One address receiving payment after payment. She needed more names, more accounts, more companies. And that is when a simple act of theft became something else entirely. It became a system. By the fall of 2024, Jennifer Petrillo was no longer writing checks to one fake name. She was managing a network. 4 ghost companies, multiple fictional individuals, all of them existing only inside the casino's bookkeeping software. All of them receiving physical checks signed by the one person authorized to sign them. But every fake company has the same problem. At some point, the check has to go somewhere real. A real bank account, a real address, a real person who can actually cash it. This is where a second person enters the story. Co-conspirator number 1. Pennsylvania State Police confirmed in their official filing that Petrillo did not act alone. She allegedly conspired with a family member. That person's identity has not been publicly disclosed. In court documents, they appear only as co-conspirator number 1. Their role was straightforward. Real bank accounts opened under their name. Real addresses to receive the checks. Real hands to deposit them. The money would leave the casino as a legitimate-looking vendor payment, arrive at a real bank account held by a real person, and from there, disappear into a network of cash app transfers, investment accounts, and personal purchases. On paper, Hollywood Casino had simply paid its bills. A trainer here, a service provider there. Nothing unusual. But moving money is only half the problem. The other half is making sure nobody inside the system asks questions. The casino's bookkeeping software was not silent. When accounts went negative, and they did, repeatedly, by tens of thousands of dollars, the system flagged it. A warning appeared on screen, an alert that required human confirmation before the transaction could proceed. That human was her. Every time the system flagged an irregular transaction, she approved it manually. Her explanation to anyone who might glance at the screen was always the same. Technical sync error between the bank and the track. I'll clear it. She was the only expert in that office. When the only expert tells you something is a technical glitch, you believe them. Nobody pushed back. Nobody escalated. Nobody called the main accounting department to verify. For 9 months, that single sentence was enough. And while the ghost companies were receiving checks upstairs, downstairs, the races continued. Prize funds were paid out. The division ran normally. From the outside, everything looked exactly as it should. That was the genius of the location she had chosen. The horse racing division handled so many payments to so many different people that a few extra names on the recipient list barely registered as noise. By the end of 2024, she had taken more money than most people earn in a decade. She had not been caught. So she made a decision that financial fraud investigators see in almost every case that reaches this scale. She stopped being careful. This is the part of the story investigators call lifestyle creep. The moment the theft stops being about solving a problem and starts being about something else entirely. Power, status, the feeling that the rules that apply to everyone else do not apply to you. It did not explode overnight, it escalated. Multiple spa treatments, then cosmetic surgery, totaling tens of thousands of dollars. The line at which the spending crossed from untraceable cash into medical records and appointment books. Then Lego Ultimate Collector Series sets, Millennium Falcon, Eiffel Tower. Technic Bugatti, a documented alternative asset class with rising resale values, over $40,000 worth, still sealed in their boxes. Then a $45,000 Tesla Model 3, registered under a real name. Then a Robinhood investment account under her co-conspirator's identity, funded with over $200,000 of casino money. Then hundreds of Cash App transfers, fragmented below reporting thresholds, a technique that is itself a separate federal crime called structuring. The Tesla, the surgery, the Lego. Over $500,000 funneled into physical assets, stock portfolios, and structured cash. But the most audacious purchase was none of those. She bought a racehorse, Uncle Eddie, a real horse, purchased through a third party using casino money. To race at the casino's own track, she stole money from the casino, bought a racehorse, entered it in races at that same casino, and would have collected the prize money herself. Prize money she controlled as the bookkeeper. Investigators described it as a closed loop, a fraud that fed itself. She was not just stealing from the system, she had built a system inside the system. By early 2025, the total taken had crossed $700,000. The ghost companies were still active, the checks were still going out, Uncle Eddie was registered and ready to race, and Jennifer Petrillo went on medical leave. March 17, 2025. Someone else sits down at her desk. This person's name has never been made public. Not an investigator, not an auditor, just a colleague, filling in, trying to keep the paperwork moving while she was out. Within minutes, something looked wrong. An account with a negative balance, tens of thousands of dollars in the red, a recipient name they did not recognize. This person scrolled further. Another unfamiliar name, another negative balance, another outgoing check to a company nobody in the office had ever heard of, and another, and another. The colleague stopped scrolling and called management. Management looked at the same screen and immediately understood this was not a clerical error, not a sync issue between the bank and the track, not a technical glitch. They called Pennsylvania State Police the same day. The case was assigned to the Bureau of Gaming Enforcement, not a standard police unit, a specialized body that investigates financial crimes inside Pennsylvania's licensed gaming facilities. People who understand bookkeeping software, check issuance protocols, and casino accounting structures. They knew exactly what they were looking at and exactly how to follow it. The investigation lasted nearly a full year. 12 months of tracing every check, every account, every transfer. First fraudulent transaction, June 2024. Last transaction, March 17, 2025. The same day, the colleague sat down at her desk. She had not stopped because she wanted to. She had stopped because someone finally started to understand something. Investigators followed the money out of the casino and into the real world. The checks had gone to accounts connected to real people, real addresses, real purchases. The Tesla was registered. The Robinhood account had a name on it. The Cash App transfers had timestamps and recipients. The surgery clinic had appointment records. The Lego collection, still in sealed boxes on the shelves, was photographed, cataloged, and valued. Every purchase she had made with the confidence of someone who believed she would never be caught became a data point in the investigation. On March 11, 2026, almost exactly 1 year after the investigation began, Pennsylvania State Police arrived at the house in Mannheim with a search warrant. Jennifer Petrillo was arrested the same day. 9 felony counts: theft by unlawful taking, forgery, computer trespassing, unlawful use of a computer. In Pennsylvania, theft of property valued above $500,000 is a first-degree felony. Maximum sentence, 20 years in state prison. Bail was set at $10,000. On a theft of over $727,000, a bail-to-theft ratio of 1.4%. She posted bail the same day and walked out of the courthouse. Hollywood Casino Penn National is a licensed gaming facility regulated by the Pennsylvania Gaming Control Board. Cameras on every corner, algorithms tracking every transaction on the gaming floor in real time. The horse racing division had 3 employees. 1 checkbook, 0-second signatures required. She could initiate, approve, and record alone. A substitute bookkeeper covering a medical absence caught this one. Not an algorithm, not an auditor, a colleague who simply looked at the screen. The case is moving through Dauphin County Court. No trial date has been set. Co-conspirator number 1 has not been publicly charged. Uncle Eddie, the racehorse, was seized. His current status is not publicly known. Hollywood Casino Penn National Racecourse is still open. The races still run. The prize funds still flow through the horse racing division every week. There is now a second person who reviews every outgoing check. For 9 months, the surveillance system at Hollywood Casino logged every player, every chip, every face at the gaming tables. It never once logged her. The cameras were watching the card tables. Nobody was watching the checkbook.